Good morning. I'm going to look over a number of pairs that are offering the best trading opportunities for next week. Starting with the Australian New Zealand dollar, it's already started a very aggressive uptrend that has been accumulating really since 2015. On the weekly chart, we had a five-wave move down into April 2015, followed by a five-wave impulsive reversal. The move since then has simply corrected in three long waves into this year, with another impulse for wave one of wave three. Um, the target for this is about 1.15, first of all, anywhere above this area. An extension beyond that is not clear because this could simply be a three-wave correction following a five-wave decline here. Or it could be the start of a brand new trend going on for several years. It's simply not clear. But what is clear for near-term trading is that we are in a very aggressive up move starting this past week. So we are in a third wave. If you're not in this already from the low, there will be a chance to enter this coming week, though the correction is most likely to be very shallow. For certain, I'm looking at a return to 1.06, possibly 1.057x, but not below that. I do not think we'll see this top again. When any market is trending aggressively, there is a moving average that hugs the trend. And I'll give you an example of that. It works on every time frame. It's the 8 exponential moving average. So the 8 EMA is this line here, the one very close to price. In a trending move on any time frame, this adheres to the base of each candle. It continues on like this until it eventually breaks and corrects and reverts to the next one on the higher time frame, moves to the one on the higher time frame. So we're coming down into the 4 hour here, where it may continue just as it did here. Like in this type of move, it simply continues until it doesn't, and then the higher time frame from 1 to 4 hours will then take up the job. Following this, I'm looking for this to then continue with the daily, which is very aggressive. So if we see a couple of days of correction into next week to 1.06 or sub there, any interaction with the daily 8 EMA should propel this above 1.08. I'm looking at a first target here above that level, possibly a few hundred points higher within this whole sweep here. 1.08, maybe a fourth wave and then a fifth wave, something like that. It is very aggressive anyway. So any interaction towards the 8 EMA on the next time frame will propel it further. And this works on all time frames, 15 minutes. It simply hugs the line in an uptrend or downtrend. And then the 55 comes in later, but that is not such a close following line. You'll see it everywhere here on the daily, up on the daily. Any interaction with that line will simply work in the trend's favor. The reason I'm mentioning this so much is because it will be difficult to get into this trade. We've had such a long correction for so many months that it's very unlikely there will be a further long-winded correction. The corrections from now on are likely to be brief, and this market trends aggressively. When it trends, it really trends. So for the next few weeks, probably the next few months into May, I'm looking for an almost constant up move, certainly for the next few weeks. That is, at the moment, the move from this week, anyway, judging it by wave counts, we had a 5-wave move up, second wave correction, and we have a 1, 2, 1, 2, 3, 4, 5. Probably done with, probably going into a fourth wave now of this segment. So any move back to 106 here, 1057 with a bit of luck, simply has to be taken and continued up. I was just looking for a stop level on this move if you're going to enter a new position. It is so aggressive that price tends to have a way of returning to previous resistance points. I don't think we'll be coming back here. I think this was blown through for good, but we will maybe enter this area again, which is why I mentioned 1057, and any positive support there should be taken. Until I see a more constructive bull flag, I'm not able to give an actual level for a stop. That's simply how it is at the moment. There's no corrective pattern as such, and I know these trends on this pair. We'll see next week if it continues as violently as I expect it to. Okay, two Canadian dollar pairs that are looking like they have a very clear moves on the way, very strong and clear moves. One is US Canadian dollar. We had a 5-wave decline in 2016 rather. A long correction last year where we've been impulsing down from there. This segment here is a 5-wave decline followed by a 3-wave bounce. This also is a 5-wave decline into last week, from which we've had a 3-wave bounce. And now from the Canadian news on Friday, we are declining again. At the moment, it does not look, it's not crashing, so it does not look so aggressive yet. It could be a leading diagonal, 1, 2, 1, 2. It would have to begin to crash right away into Monday and Tuesday. Any type of further correction here will suggest another up move for wave 2 of wave 3. Given the current count from the high, the second wave high is here. We had a 5-wave decline into here, 1, 2, 3-wave bounce, 5-wave decline here, 1, 2, 3-wave bounce. And if this holds here and moves up into the 132x, 133 area, it will give a very good short opportunity for the end of next week, most likely. The alternative is, see, the gist of this is that it is exclusively bearish. There is no bullish slant on this. Every opportunity, every view I have is bearish on this pair. The question is how the price unfolds from here and develops. Judging by the 2 downwave moves so far, it's already within a 3rd wave probably. Now, it could be a leading diagonal. So you have 5, 3, 5, 3, 5 next week into 1, 2, 9, 1, 2, 8, followed by a short bounce. So it would look something like this. And we would have a bounce here for what would be wave 2 overall, but not very high. I wouldn't expect it to get above 132 because usually bounces off of leading diagonals are shallow, then followed by in a very aggressive 3rd wave. So if the price declines into 129, 128x area, I'll be looking for a bounce to die off very quickly. Alternatively, if it finds support in this region and turns up once more, there is the opportunity for a short from this area. So we'll see how it unfolds, but the downside on this is huge. I'm not sure if I have this labeled actually. I don't have it labeled, but I'm looking for about a 121, essentially a 1,000-point move, initial 1,000-point move for the Canadian dollar at the moment. 120, 121x. Just to give an example of how shallow leading diagonal corrections can be, I did this yesterday on one pair. We had one in wave 2 of wave 3 in the Australian New Zealand dollar here. This is a leading diagonal. Very shallow correction, not even making it above the fourth part of this leading diagonal. These are quite common. Up or down leading diagonals have shallow corrections. The New Zealand US dollar, this is not a leading diagonal in my view. The correction is abnormal. So if you're looking at that as leading diagonal, it's unlikely that the pair is bearish. But as for trading opportunities into next week, I would put this at the very top of the list, because once you're into this trade, whether it's from a bounce off of here around 131, 130, or a move into 132, 133 into sell, we're looking at a trade to be held into May probably. So the next 4 months, 3 months or so, for essentially a 1,000-point move. It will be enormous. It's been a long time coming, and often when there are these extended corrections that are very choppy and go on a very, very long time, as this has, and as the Australian New Zealand dollar has, going on over a year, very long correction, the up moves will be extraordinarily bullish. Or whichever direction the trend is, the continuation of that trend following a long correction will be extraordinarily bullish or bearish, extraordinarily strong. So I'm looking for the same here. It's a very simple thing. Judging by how the actual weekly candle closed, it's like an inverted hammer. So if it does puke to this 129 area, any bounce and correction the week after probably would be a sell opportunity. We'll see. We'll most likely have a clear view and trade on it into the end of next week at the latest, and the week after then should see a capitulation in this pair finally. Now there's an interesting parallel to this in a way. Switch over to the pound cable. Pound Canadian dollar. This is also one of the best trades I can see at the moment, but for the time being, I'm looking for it to go in the opposite direction. The pound has been unwieldy for a while. For example, while the euro would fall, well, in the past little while, it's had its own style, essentially. Pound has a bullish edge across several pairs. Cable has a bullish edge at the moment. Pound New Zealand has a bullish edge. Pound Canadian dollar. Even Euro Pound has a bullish edge. Well, for bearish rather, bullish for the pound's function of that. So although US dollar Canadian dollar is exceedingly bearish, pound Canadian dollar has a strong bullish slant. Just to cover the whole move, ignoring this part as more likely being a truncation, there is a clear 5-wave move into the January low from which there's been a very strong reversal. That reversal was a 5-wave move in one single thrust, and we've had a 3-wave correction so far. There was no 5-wave development here. In the end, it petered out with a 3-wave move, 1, 2, 3, X, 1, 2, 3. And we are now coming down for Y of this pair. We've had a 3-wave move into here yesterday. 1, A, B, A, B, C. C is a 5-wave move on the 15-minute chart. 1, 2, 3, 4, 5. And we are now correcting this. So this is the first part of the next down move completed. So we have A finished here. We will most likely follow this with a B wave correction now, a little bit higher, followed by a C wave into 161X next week. I might trade that if there's a clear bear flag going on here. But the one I really want to get into it is the aggressive up move to follow, essentially from 161X, anywhere sub 162, to the 17s. So again, a 1,000-point move going in the opposite direction of US Canadian dollar. A break of this resistance line here. I mean, there's nothing broken now. I'm working on a forecast off of the impulse here. This pair, just for absolute clarity, this pair ultimately remains bearish until there's a break of this trend line. The reason I'm bullish is because of the 5-wave impulse here, which signals at a minimum one further wave development up. So if I can find a low into the 161X area here with reversal, candlestick reversal pattern or divergence pattern, some type of supportive structure down here within this 4-hour channel, I will be looking to take this move aggressively up because the risk is very much in the bull's favor on this risk reward. So these three pairs essentially, Aussie New Zealand, US dollar Canadian, pound Canadian, have clear wave structures. One is clearly trending already. US Canadian dollar also is within a downtrend, I would say, but it has not taken the aggressive move of Aussie yet. And pound cable, given that it's pound and all the turmoil or dysfunction going on with Brexit, this hasn't, this is a little more unpredictable in a sense. There's a whole like psychological mess going on with this at the moment, at least for some of us. US dollar yen, at the moment I'm still bullish on this. From the low, which I marked as a truncation into summer 2016, we've had 3 waves. I've been watching this. I traded this yesterday actually for a short into wave 4 on the daily, but I have not taken a long position yet, which I will look to initiate on Monday with some support. We had a correction to 38.2 of the 3rd wave here with a kind of ending diagonal, which I could not quite get to materialize perfectly, but the structure's there. So looking into this, I mean, my trade on Friday was a short from here into the wave 4 area. Against trends, not the best trade in terms of, it's a higher risk trade because I'm going against a trend that I favor, frankly, that already had a propulsive move up. But it worked out, and the interesting point is the spike at the 38.2 level. If this can turn here, we'll be looking for one more wave higher for a 5th wave. It started correctively, and it's continued correctively down, 1, 2, 3, 1, 2, 3, and then it's had 2 3s down, basically. Or perhaps a ABC move into here, 5 waves for C. In any case, it has made a corrective move down, so likely to continue up. The bearish is non-functional at the moment. On yesterday's daily candle is not really bearish. This is all right. as well. So we're looking for this to continue higher. So dollar yen to continue higher. The impact for that on gold. Gold may turn bearish if this does go higher. I'm not following gold, but usually there's a inverse correlation going on there. So any type of support around 113, we'll look for this to continue higher. For a fifth wave above 114, possibly to extend. But so far we have wave 1, wave 2, and for wave 3, leading diagonal 1, 2, 3, 4, and 5 of 3 extends 1, 2, 3, 4, 5. So that's wave 3. And a sharp correction for 4 so far, whereas 2 was a sideways 3. So far this is working out well. So as long as it can hold this level, 113 ideally, not below, not much below here, otherwise it will start to look wrong. Invalidation will occur with a crossover of wave 1 level, as there cannot be an intersection. Euro yen, overall I still have a upside view on this, although that didn't close well obviously on Friday, but it's the same idea principally. Fourth wave into 38.2 of wave 3, a choppy correction, WXY pattern above the weekly trend break. Now for both these pairs, if these pairs do end up collapsing, I can adjust the count so that this is actually all of 5 for C, because we had A, B correction and 5 for C. At the moment, I'm looking for 1 higher for this as well. Yeah, the bullish edge on this remains intact. Less clear on Euro Yen because I do not have a 5-wave structure here. So I'm staying away from Euro Yen. US Dollar Yen, however, has a clearer possibility. Another bullish pair that's looking good for next week is again a pound pair with New Zealand dollar. It is in a long-term downtrend. I'm advising a long trade against this trend because this looks like a large fourth wave up to 1.8x area, which would tie in with the other pound advances. The correction, the move so far over the past 6 months, 5 months, has been corrective. 5 waves up for A of 4. A, B, C correction with B as a try. And so far from the low, we advanced with 3 waves, corrected with 3, and we have 5 so far from here. I'm looking for this to correct next week and then to advance just as similar to the Canadian pound Canadian dollar. So at the moment, on the lower time frame, 1, 2, 3, 4, 5 wave advance. I'm holding out some possibility that this is a wave 4, so you have 5 here, 2, 3, 4, and 5. If that is the case, it would hold 38.2. Otherwise, a bit of a deeper correction would work out very well. What tends to happen in these situations is that price, it's not what I would call a fake out as such, but there's a significant retracement of a 5-wave advance that appears on a larger time frame. For example, if you're looking at the weekly candle here on pound New Zealand dollar, next week's candle beneath the 8 EMA often retraces to the opening level of the previous week's candle. Same applies to a daily or monthly situation. So next week, it could retrace all the way here to the opening of last week, which would be 7075, 17075. So a deep correction into what would be wave 4, almost a 78.6, 61.8 correction level. That's entirely feasible. Price often reverts to wave 4s of lesser degrees anyway. Um, this is looking, corrected structure will count for everything in this. If it pukes, then stand back. But if it's a corrective decline into that, as it started out to be, there will be a trading opportunity to buy into this level with very low risk to here, essentially. This is your window. As long as this low holds, we are bullish on this pair. The same thing happened regarding the weekly move that I mentioned. Coming down here, if it does come to about 17075 area, look for it to hit this area and reverse up strongly. That happened just this week in Aussie New Zealand. I was bullish last week, and it came down to the very opening of the previous week here. You can see the wick, and it reversed very aggressively from there. That type of situation happens all the time in all trending markets. So I will be looking for that this week in pound New Zealand. As long as last week's low is not broken, it remains bullish. Here's the, going back to the pound Canadian dollar. Now, this is like an inverted hammer, but it's the kind of thing you want to see at the bottom, not here. Since this is still channeling, this is the one with the 4-hour channel, the 5-wave advance. This is the type of thing where I would expect it just to come out, poke beneath the low within the channel. It is curling up. Usually when these things start a move, they will quite often continue them for the next few weeks. So it's the kind of thing we see low made on the 4-hour, stays within the channel, within a corrective pattern, reverses and takes off in the next few weeks. New Zealand, Euro New Zealand. New Zealand's dollar in general is weak. Since the Bank of New Zealand news this past week, it has not performed well, and it looks like it will not perform well going forward the next few months anyway. 5-wave advance in 2015, a long 3-wave correction into this past week. We have an ending diagonal. There is room for it to continue down. I'm not going to say that it's completed yet because we don't have a 5-wave pattern. Just one moment, please. Okay, sorry about that. We broke a channel, but from that low so far, we've had only a 3-wave advance. Now, typically on broken channels, there are only 2 price interactive points on here, the origin and the second one. These channels tend to work better when there are 3 within the channel to prove that the line and resistance points diagonally were valid, and then a break above them will often serve as resistance turned to support for a further advance. So far, we have not seen price interaction yet to suggest it's going to continue, but that is what I'm looking for at the moment. 1, 2, 3, 4, 5. It could be a 5-wave advance, in fact. Deeper correction, maybe. Or this could all be part of one. That is possible too. Or also this is one, A, B, C. So there are several possibilities. What we want to see on the lower time frame is simply a reversal here. It is setting up for that. If that appears with the correct type of candle, it will be an opportunity to buy it for a move higher. Very simply, 1, 2, 1, 2, 3, 4, 5, 4, 5. So it could be a 5-wave advance here. Yeah, this is quite clear. 1, 2, 1, 2, 3, 4, 5, 4, 5. So this is a 5-wave advance, which is how I had it marked, but for some reason I think I just mixed it up a little. So in any case, if this does correct further into this region and it stays corrective, there will be a chance to buy higher for a very aggressive move. The weekly, it's valid for a move higher, but at the moment we need to see a decline hold this level, basically. That's what I would prefer to see. So I don't have a clear... I favor the upside on this very aggressively. I just don't have a clear option to buy like the other ones I've shown so far. A clear chance to buy. I'll come back to this on Tuesday, have a look. I might not do a video on Monday morning because of this one, but I will do one on Tuesday morning. Just to continue on with a few other pairs that are actually offering trading edges. It looks like the X wave of New Zealand US dollar has completed. Large 3-wave advance. 3 waves down so far. I'm counting this a W, X, and a further deep Y to follow. I'm not bullish on this pair at all, despite the length of last month's move. From the high, we have a 1, 2, 3, 4, 5-wave advance. Hopefully a deeper correction into 250 area, 7250. Let's see if we get a bearish flag. So this pair remains on the downside. 1, 2, 3, 4, 5. ABC. So A of the correction, maybe B of the correction, and a deeper C for 5-wave C, something like that. So New Zealand dollar will continue to be bearish next week, and against it, expect pounds to strengthen, Aussie to strengthen, dollar to strengthen against it. This pattern has been corrective. Simply nothing going on here. Not interested in buying it, not interested in selling it either. Bull flag. At the moment, I'm still looking for it within this triangulating sideways pattern, range bounds, suggesting a lower move eventually, but there will be resistance supply in this area. Okay, and finishing up here, cable higher, but I don't have such a clear view on this at the moment. We had a 5-wave advance. I was preferring to mark this as an ABC type of correction, though it could also be 5 for here for A, B, and C. So this would be A. You have a 3-wave correction for B, and then we start a 5-wave advance next week. So I will adjust this if we see another low, because this is not convincing yet. Overall, this pair has a bullish edge for now, before, again, I think capitulating in a few months or even weeks for now. But for now, it is bullish edge. So any new low here, I'll adjust the count and take it from there. 1, 2, 3, so it could be A. 1, 2, 3 for B, and then a 5-wave advance, 1, 3, 0 area. Alternatively, as I just showed, 1 to here, A, B, C, and we hold this level, because this could also be 5 into here, A, B, C. We'll see how it goes. I'll adjust the counts. There's no clear trade on this, so I'll pass it by. There is a clear trade on euro dollar, though, which has had a corrective move all of January, suggestive of a leading diagonal, but without subsequent follow through. It's simply petered out again. It's not looking great at the moment. There's a 5-wave move in this, 1, 2, 3, 4, 5. The fact it's come down more suggests that this is actually altered from my view last week. So we have 1, 2. There's a slight, 1 would come to about here, and then a strange deep correction for 3, similar to a flat. And then wave 4 is a flat here for much more likely. And now this is wave 5 completed. So if we see that type of bounce, that could work out as well. If it breaks this and it corrects out a bit higher for a sell, that would work. Alternatively, if it simply collapses here, this first segment would be all of wave 1, wave 2 into here, and now we've had wave 1, wave 2, wave 3. So if that continues, we're in a much more aggressive middle third now. As such, just show it again. What I'm looking at is 1 originally, or preferably 1, 2, 3, 4, 5. To have that count where you have 1, 2, 3, 4, 5 with a flat for 4, you would need to set wave 1 here as such, because otherwise there would be some overlap between 1 and 4. Alternatively, wave 1, wave 2, and now in wave 3 we've had 1, 2, 3, and we simply continue to fall into next week. There's no direct trade here as such. It is now bearish. I'm not looking for a bullish move in this at all. I think the bulls are exhausted. But as mentioned, there are better trades out there. There will be some interaction around 1050 if it gets there. As always, open and close positions on candle levels will see interaction. So if we have this 1, 2, 1, 2, 3, 4, 5, 4, 5, 150 area, it could see that 5-wave advance here, continues to puke, 3-wave bounce, and then another fall. Take it as it comes. So for next week, the pairs with the best edges remain Aussie New Zealand, which will not correct much. I think the correction will be very brief. US Canadian dollar, which is exclusively bearish. Pound Canadian dollar, which is bullish. Pound New Zealand, so long as this low holds and the correction and the move down is corrective, bullish. Euro New Zealand, maybe, we have to see, and US dollar yen. If it can find a low here and we advance for a 5th wave, we can then find a further correction there. So those are the ones that are looking good for next week, and I'll update in a few days, probably on Tuesday, maybe Monday afternoon. But these trends on the pairs I just mentioned should continue for the next months, at least for a few weeks, probably a few months into May, when there's often some type of transition for the summer. So I would do everything I can to get into these moves as shown, as long as the correct structure appears within the waves, as these are the ones that it's essential to grasp when the opportunity appears, to size up, to take the position, which are all low risk, relatively speaking. They're the ones that will help you grow your account to continue making your living from this, as they are propulsive trending moves, rather than anything choppy, which I've been dealing with for months in Aussie, New Zealand, US dollar, Canadian dollar. This is the time when they take off, and this is the time to size up and to take the position, and then to enjoy the next few months if it materializes. So have a nice weekend. Good luck with everything next week. If there are any questions, let me know, and see you in the next video.